All right, good afternoon, everyone, and welcome to our live webinar. I want to thank you all for joining us, and I want you to make sure you take a lot of notes, sit back. There's a lot of information that we're going to share with you today, and I hope you find this information very useful and helpful to get you started in running your own business. Feel free to also click the Q&A button if you have any questions throughout the entire presentation, and we'll make sure we get back to you with those answers, with those questions. All right, so SMG Financial, making your future a success. So we're going to cover the following subjects. Become Your Own Boss webinar. So today's exclusive webinar agenda is, I'm going to introduce myself. We'll do the step-by-step process on the program. I also invited one of our top commercial lending partners. He's going to go over some information with you guys. I also have Dave, who is one of our loan officers on the call as well, or in the webinar. He's going to share his information with you. We're going to also have CFO Sagar go over some information on the digital marketing piece. And we're also going to give you the final steps on how you can get started in this process. All right, so make sure you take a lot of notes. So a little bit about myself. My name is Nathaniel Holliday. I'm the founder and CEO here at SMG Financial. I'm originally from Pittsburgh, Pennsylvania, and I've been working in the financial industry for over the last 25 years. I obtained my master's degree in business management with a concentration in accounting. In 1999, I actually relocated here to New Jersey to pursue a position as a regional manager for the Financial Resources Credit Union of New Jersey. It wasn't until 2004 when I accepted a position with as a retail banking manager for the fourth largest bank in the world. And in 2016 is when I actually created SMG Financial, myself and a partner with SMG Media Group. And in 2020, we relocated and expanded the business to the Piscataway office here in New Jersey. Currently, we have a team of about 15 individuals that work for us, and our goal is really to have at least 30 people new hired coming on before the first quarter of next year, 2021. Currently, we have over 340 partners, and this is across the country. So a step-by-step process in starting your own business. The first thing that you want to do when you come on board with us, we have you choose a name for your business. We then make sure that that name is available, and we purchase that name for you, that URL. At this point, you're going to be introduced to the graphic designer. He's going to start creating your website and customizing your logo and things of that nature. He'll also provide you with 3 different samples on your logo to choose from. And on day 1, we want to make sure that your onboarding process is you being introduced to each and every person that we have working on the SMG Financial team. At this point, you'll receive your online course credentials from our on-course learning administrator via email. And this will help you to get started with the 14-day comprehensive, the MNLS, the Nationwide Mortgage License System course. And courses normally start on a Wednesday or a Friday. So prior to completing your course, you can also start referring individuals, either family, friends, or anyone in your networking group looking to apply for residential or business loans. And you'll also receive full commission on those individuals that do a loan while you're actually going through the training process. Once you have completed your 14-day course, you will be eligible to sit for the state exam, for the local state exam, no matter what state you're in. At this point, we'll actually provide you with a simulated practice test exam to actually prepare yourself for the state exam. And just keep in mind, 98% of the individuals that utilize this practice exam, they do pass it on the first attempt. And after passing your state exam with a score of 70% or better, you will be sponsored by a national mortgage company. All right. And once your sponsorship is completed, you will receive your laptop with the software through Encompass that's downloaded on the system and ready for you to start accepting residential mortgage applications. You receive all the training material, the computer headset, the business cards, marketing material, and this will all be shipped to your address. You also have access to over 3,200 Udemy courses, which 20 of those courses really focus on the products and services that you're actually able to offer to individuals. All right. The other certifications that you also have access to through this Udemy is the commercial lending side certification, the credit repair, debt consolidation, student loan consolidation, and also student loan refinancing. All right, so at this point, I'd like to introduce one of my top commercial lending partners, Doug. He's actually going to go over some information with you all. So Doug, you can take it away from here.
Again, Nate has introduced me as Doug Furman. I have been in my own businesses, believe it or not, since 1979. I have been involved with various areas of, I've owned a number of companies, and I've also been involved with the financial areas, financial financing, for approximately 20, 30 years. I have an undergraduate in engineering and an MBA in finance, and throughout my career, I've been involved with building companies and providing services to various businesses. What I would like to go over with you on a broad brush basis is that in the commercial lending arena, it is a very splintered, very niche-driven of business. Unlike residential financing, where you have basically your credit and cash and income, and it's pretty well defined. Commercial industry, there are a lot more variables that will affect the type of loans that you're able to approve. I want to hit on two broad categories at this point, and one will be for owner-occupied type businesses, and the other one would be for non-owner occupied, as well as they can be owner occupied, but the difference is whether we do it with an SBA loan or we do it with a non-SBA loan or conventional. With an SBA loan, SBA loans are strictly for owner occupied businesses. You cannot use an SBA loan for any type of investment properties. You cannot use it, for example, for a multifamily, mixed use, or a retail strip center or anything like that. It's only for owner occupied, which means that the business that you're obtaining the financing for needs to occupy a minimum of 51% by square foot of the space allocated. Now, SBA loans are very popular because of the high loan to value that you're able to obtain, up to 90%, even more, even higher than 90%. You can usually roll in the closing costs. For certain SBA loans, you're able to roll in purchasing equipment, inventory, even get some working capital. And so it is a very popular program for business owners that are looking to, that don't have a lot of don't have a lot of funds to put down on a property, and perhaps even perhaps the business even has some marginal credit issues, because with an SBA loan there is no minimum credit. That doesn't mean that you can just bring any type of borrower to an SBA loan, but that means that everything can, with explanations, almost anything can go through. The largest advantage also with an SBA loan is that we can go up to $5 million on what's called an SBA 7A program. And with a 504 program, go up much higher, like to $10 to $12 million. Now, under these loan products, you may see some other types of loans like export program loans, express loans. Right now, during the COVID crisis, everything is on a case-by-case basis. When we talk about being able to do an owner-occupied property, some common sense is needed to understand what we might be able to do. For example, if you were looking to do a restaurant in a state that is not where restaurants are not opened up, or they're opened up on a very minimal basis, it would be very difficult or near impossible to be able to complete an SBA loan. On the other hand, if you're looking to do an SBA loan with something where it was an essential business, some businesses, for example, right now I'm doing an SBA loan for an HVAC contractor, and not only have they survived, but they've thrived, because now they're able to introduce certain high filtration systems and market those. So during this COVID environment, everything needs very careful analysis and explanation in order to determine whether you can do it, whether we can finance it or not. And the best way to be able to determine this, Nate and his people, forms that they can use to send you. And once you send me a basic scenario, I will be able to very quickly tell you whether this is a go or no go. So having said that, why don't we move on to the other program? With this program, this is financing that can be used for either owner-occupied or investment. The difference is that since it's not an SBA loan, the loan-to-values are much lower. In a very healthy environment, we were able to go up to 80 LTV on a lot of loans. Right now, because of the COVID crisis, those LTVs are down 75 LTV, sometimes 70, sometimes 65, depending on a number of factors. The advantage to this program is that this financing is done very quickly. We can close these in 3 to 4 weeks. This is done under my own company name, and most of the underwriting for loans like this are quite flexible. Unlike a bank situation where the bank is looking for stabilized income from, let's say, a multifamily mixed-use property, we can finance loans that are not totally occupied and where there's some uncertainty with the income flow. The other good point about these programs is what's most important to all of us, and that's what we get paid. Because these are my portfolio programs, I can provide very healthy referral fees, and that's something that I'll be working through Nate. Now, typically these loans, you can see the loan term and amortization. It's up to we can do up to 30-year fixed. You won't find that in a bank for these types of loans. And the rates, this is a slightly older flyer. I have rates starting at 6.25. There are a few rates down at that level, but generally these rates are in the higher single digits, more like 7 to 9%. But again, these are loans that are typically, a borrower is not typically able to get at a bank, or they don't want to produce tax returns, or whatever other reasons that they decide. This is a more of a white sheet. What it does is it will tell you how I market to banks, because banks are a very big source of my referrals. Banks are very conservative, especially during the COVID crisis, but even in normal times. So when I go to a bank, look for referrals, I give them these bullet points. First of all, we provide financing that your bank cannot finance. And then the relationship. I assure them that I am not going to interfere with their relationship with the bank, so that I'm not going to take their loan and go to one of their competitors. I am going to close the loan with one of my own products, and we're not looking for a relationship with that borrower. And in the case of competition, since we provide the financing and you maintain the relationship, the customer has no reason to go to one of your competitors for financing. Tell the bank bank managers as well that by referring loans to me, and with us being able to do them, and you retain the relationship, you're creating a lot of goodwill and customer loyalty. And I have found that this works tremendously well. I have a large group of banks that refer loans to me. Now I'd like to just step off from this a little bit. Down below, by the way, here's some examples of owner-occupied and investment type properties. But again, during this the COVID situation, everything is on a case-by-case basis, depending on what state they're in, depending on how, if they're closed or open, or what the situation may be. So the best thing that I can tell all of you is to pass it by me, and I will let you know, whether it's a go, no go, or a maybe. Now I would just like to go and step aside a minute, and just I'm finished with the flyers, but I'd like to just mention quickly what is the criteria that we look for to be able to approve a loan. As I mentioned before, residential is a little different, but there's basically five areas, and sometimes you'll see that being called the 5 C's of commercial lending. Generally, it comes down to certain items like character. Character is basically through the credit report. We don't only look for credit score. We look for how somebody has paid their other obligations, and you can tell an awful lot by looking at a credit report other than just the score. So character is one of the big major conditions. conditions that we look at. Then we look at other conditions such as the interest rate, the amount of the principal that's being asked for, other items that are part of that analysis process. Then capacity. Capacity is a very, very important issue. That comes down to the cash flow of either the business or the investment property that you're looking at. If you're talking about a mixed-use property, a multifamily, the cash flow is the rent roll minus the expenses, and that's a very important analysis. And when it comes to an owner-occupied, it would be their business financials. Now, there is a ratio that we look at that's a little different, and that's called the debt coverage ratio, or DSCR, DCR. You might have seen it in a number of different ways, but that's basically when you take the loan amount and you look at how much the payment is going to be, the profitability of that entity needs to be at least. Generally, we're looking for at least 1.1, 1.2, sometimes higher depending on the property type and industry. Then capital. That's an obvious important situation. Many times people come to us and they're looking for a loan, and then I look at their personal financial statement or the bank accounts, and they don't have adequate capital. And so I say, well, where are you going to come up with the capital? Well, I was thinking I could get 90% or 85% loan to value. Well, that's not possible, and unless you're doing an SBA loan. So it's important when you're looking at a potential borrower that you take a look at how much. If they're looking to buy something, ask them how much money they have in the bank, how much liquidity. That's important. We can accept gift funds at times. We can accept secondary financing at times, but they need to come to the table with some adequate funds. And then the fifth item, which is paramount, is collateral. What are they going to post in order to secure the loan? If it's going to be a purchase of real estate, it's the value of that real estate that becomes very important. If they're going to be, if it's an SBA loan and they're going to be purchasing equipment, obviously it's the value of the equipment. But the collateral becomes very important, and that rolls into the loan to value, because you cannot go up to a very high loan to value in this day and right now during COVID. One other bit of information because of COVID is that we are looking for explanations of what happened during COVID. How did COVID could affect their business? What did they do to mitigate that? The downturns, and what does it look like as they're emerging from that? And not only with COVID, but the story in every loan is very important. Sometimes borrowers and brokers throw at me a bunch of documents with no explanation. Well, that doesn't do me any good, but because the explanation of what the story is about, what the borrower is looking for, what they are trying to achieve, what are the negatives, can we do to mitigate those negatives? Many times we can do loans that you cannot do in residential because there's more flexibility, but you can't just throw it against the wall to see what sticks. You have to explain what the deal is about. So that is the conclusion of my section. If you have any questions, and pass it through Nate and his people, I would be glad to respond to those questions.
Thank you, Doug. Thank you so much. And again, if anyone has any questions for Doug at the end of the presentation, just put it in the Q&As, and we'll make sure that we answer those questions. But thank you so much, Doug. I truly appreciate all of that great information.
Thank you.
Right now, I want to go ahead and introduce one of our loan officers, Dave. And Dave's going to share some information with you all.
Great, fantastic. Okay, everyone, my name is Dave. I am a licensed loan officer and I'm here to give you kind of an introduction as to what you can expect once you pass the test that's provided to you going forward. And it's real simple. Obviously, SMG will provide you with all the tools that necessary to pass your test, both federal and state. Once you receive all that, and once you have that test passed, they automatically will enter that into the NMLS. You don't have to do a thing. It's done by the on-course learning, and they'll take care of all of that, and they'll get you uploaded into the NMLS system. Once you're there, the next steps are put to you by the NMLS. They will obviously start out with having a background check done. All loan officers have to have a very severe background check. They call them regulators. They're the ones that will do all the ins and outs of who you are, what you've been in your past, any records you may have had. They cover it all, and they will ask you to probably have 2 sets of fingerprints done. You'll get that done by the FBI. That will cover the federal, and usually Identico will take care of the state, but both of those will have to be done next, and the NMLS will provide you with that information. You'll get those taken, and then you'll get those forwarded back to the NMLS. Once they get into the NMLS, the next steps will be for you to find a sponsor. You'll ask them to contact the NMLS. They'll do that. They'll connect you, at the NMLS with the sponsor. That's done, and you're sponsored by a lender. The next step, of course, will be for the lender to reach out to you with whatever materials and criteria that they'll need from you to get you started in the system. Usually they'll provide you, again, with all the tools that you'll need to move forward with their company and facilitate, writing loans. What you learn from the test, that's all the compliances and everything that you'll need to understand how to talk to a borrower. You'll understand whether it's an FHA, adjustable mortgage, whether it's conventional, all of that you'll learn. But what you'll get from your lender is you'll learn the tools to take all that information and apply it to the system. Starts with Encompass. Encompass is a Fannie Mae and Freddie Mac document that you'll put all of your information from your borrower into. It's the formal application. It starts there. All of that will be uploaded into that document. From there, anything that's missing, you'll have to, further. And then from there, you'll go to the next step, which is collecting all the documentation. Now, all of this is very extensive training from the lender. He'll show you how to go about uploading to Encompass. It's quite a involved step-by-step process to go through the system to learn the tools that are given to you to put that borrower into the system, to move him through from the first stages of the application, the formal 1003, and then up to processing, eventually to underwriting, and then, of course, to close. All of that will be on your lender to train you, and they all provide you with very extensive webinars and courses to teach you what you'll need to know going forward so that you can take your borrower's information, put it into the system, and have it move through the process. Once you've got that down, you're off to the races, and the next steps, of course, are to close loans and have happy borrowers and move forward with all kinds of referrals. It's really a simple process, and it'll all be trained by the lender to you. Unbelievable support. They're there for you every step of the way. It doesn't matter if you can't spell your own name, they'll help you out with that. So most of the lenders are pretty much buttoned up that way, and you'll have to find one that works best for you. I can tell you that I'm available for any questions that you may have going forward. I'm always available. Nate can give you my particulars, my email address. I'd love to talk with you if you have any questions about anything. Lenders in the country, strictly residential. We're not very big on commercial. That would be Doug's forte, but it's kind of vanilla and very simple. We handle all the different loans, FHA, VA, conventional, you name it, any kind of adjustable. All of those you'll learn with your lender, what they provide and how to go about handling it. And it's really that simple. It's a little bit of a learning process, but once you get it down, you'll be off to the races and everything will be great. And we're here to back you up in anything you need, any questions you have. We're here 24/7 to help you out.
Dave, I want to thank you for that information. Fantastic job. I appreciate it. And again, if anyone has any questions, you feel free to tap onto the Q&A. And if you have a question for Dave, we'll make sure that that question gets answered.
Absolutely.
All right. Thanks again, Dave.
Thank you.
I appreciate
Okay.
it. So we have now over 100 people in our webinar. So I hope you all are taking good notes, and I hope you all have questions after the webinar. All right. So right now, I want to take this time to introduce my partner, Sagar Kumar. He actually runs the digital marketing side of things here at SMG Financial and Spark and Media Group. So here you are. Take it away, Sagar.
My name is Sagar Kumar, and I basically run the digital marketing division here at SMG Financial, as well as Sparking Media Group, which is our subsidiary. A little bit about myself. Well, I was born and raised in Queens, New York. I went to school at NYIT, got my bachelor's degree in business administration with a concentration in finance and a minor in marketing. My background experience has been over 12 years in the financial services and banking industry. And, that's where we basically, got from one level to the next and pretty much, had my foundation set in the financial banking sector while still educating myself on the marketing trends today. So before we get into why, what's the best digital marketing strategy accustomed to the financial lending platform, I'd definitely like to discuss what digital marketing actually is and, and when did it start? So in mid 1900s, basically, digital marketing refers to advertising through digital channels such as search engines, websites, social media, email, and mobile apps. And I always like to refer to, especially in today's time in a COVID environment, pre-COVID, I think we all can agree that digital marketing was always essential. It was good to have. Really there for businesses to advance to the next level in terms of growth. But I think within the midst of COVID-19 and even possibly post-COVID-19, digital marketing will definitely become a must-have. Recent data shows today that as of September 28, over 180,000 businesses have closed down. And Yelp just reported that 60% of that is actually permanent closures. So, it's really transparent to understand that, digital marketing is here to stay, it's here to evolve, and it's really here to either bring businesses to the next level or even take them out of closing their doors. So how does digital marketing incorporate with SMG Financial when you start your partnership with us? Well, it gives you the ability to target the audience based on selected demographics, such as location, age, interest, For example, if we have a partner in Florida and they reside in Fort Lauderdale, we can actually target a campaign around a 25 to 50 mile radius from Fort Lauderdale, age it specifically from anyone looking to purchase a home. So that would possibly be from anywhere from 22 years old to 60. And interest would definitely be something along the lines of, home purchases, mortgage rates, and things of that nature. What we also would do in our strategy is joining select groups to create brand awareness. An example, real estate, brokers, first-time home buyers, commercial building owners. In Facebook alone, there's many groups tailored to these interests and groups that have a very engaging communication going on. So when you post something regarding your interest in regards to real estate, brokers, commercial, you will get a lot of engagement and feedback. And not to mention, the most key thing is getting ideal leads through that channel. Another avenue is leveraging all the tools and resources via Facebook Ads Manager to understand the data and enhance your campaign. That's pretty much digital marketing in a nutshell. You want to collect the data, understand what's getting traction and what's not, and basically increase your ad spend on the data that's actually bringing more engagement to your website, to your lead generation platform, and things of that nature. And basically that goes right into creating and implementing a lead form, which you also can do through Facebook, where you can customize the info you like to request from your potential client. So that could be a name, a contact, a city of their dream home, mortgage loan amount, current status in the process. That way, when you do connect with the individual, you know exactly where they are in the stage of purchasing a home, purchasing a commercial deal, and you can kind of spearhead that transaction to closure rather quickly. So, as I said before, digital marketing is definitely going to be becoming a little bit more focused, more business oriented, and with a higher demand increases the pricing. I think right now we have many channels that have a very fair pricing when it comes to ad budgets, but as new platforms come to life, such as in the most recent trend in 2020 would be TikTok, there would be more opportunity to kind of bring your business's name out there. So I hope this information is really helpful to you guys. I think you guys hopefully resonate with it and understand it. Obviously, I'm always here to address any questions or concerns, which we'll take in a few moments. But other than that, I look forward to you guys joining into SMG Financial and starting a business for yourself. Now, what do you get into digital marketing when you purchase a business opportunity within our Emerald partnership? Well, we complete your social media management. So we create it, we complete it, and we manage it. So that means engaging with your audience, and basically commenting on individuals who have made a post on the channels. What else we do is data analytics and reporting. So at the end of the month or at the end of a campaign, what we would do here is basically provide you a analytical report to see what data got a little bit more engagement, what data has an opportunity. What we also do is a website optimization. So, we would make sure that your website has certain keywords that brings your website up into higher ranks of Google or search engines like Yahoo, Bing, etc. We also ensure that all your social media accounts are linked amongst all channels, so that when we do post for you on Facebook, or whether it be Instagram, or whether it be Twitter, each post is automatically and simultaneously posted amongst all channels. And that leads to brand awareness. Brand awareness is basically consistent posting on certain times that will get the most traction from each post. The key here to creating a brand awareness is having consistency. And when we have consistency, that's where your audience will resonate, find you a little bit more credible, and basically have no doubt to kind of conduct business with yourself. One of the other things that we do is increase your following and page growth. So, you know, as you can see in today's time, the individuals or accounts or the pages on social medias with the most highest following gets a lot of engagement, gets a lot of likes, gets a lot of direct messages, and not to mention, it also increases opportunities for the individual to capitalize on any type of business transaction, specifically within residential mortgages, commercial deals, etc. Now, that brings to the last and most important point is all above covered under the Emerald Partnership for all the services that you will be providing, such as credit repair, residential mortgages, commercial loans, student loan refinances, and debt settlement. So we can create a campaign for each of the businesses under your Emerald Partnership and basically cater to the direct audience, create a target audience, and leverage all that data to bring your business to new heights. So that's all I have for digital marketing in a nutshell for you guys. And if there's any questions, we'll definitely be taking it momentarily.
So this is at the end of the presentation. And at this point, once we have an individual that's serious about coming on board, we call it schedule a business closing. That's the next step that's involved as far as your contract and also your form of payment. And it happens just like a closing of a residential mortgage. You have a closing date when you do purchase a home. You have a closing date to start your business. All right, so that's what we do here at SMG Financial. And I want to open up the floor for any questions. And Doug and Dave, if you can, I'm mute you as well if anyone has questions for you guys, and Sagar as well, if you have any questions for the digital marketing piece. So just give it a second. I got a few questions coming through right now. Yeah, make sure your Q&A chat is open. All right, Dave, I have a question coming in for you, Dave.
Okay.
What are the rates?
Pardon me, Nate?
They said, what are the rates?
What are the rates? Well, we all know that the rates are the very best they've been. I probably in my lifetime, but obviously rates depend on the product, whether it's FHA, conventional, adjustable, all of those rates differ. The program that the person picks affects the rate. Obviously, his FICO score affects the rate, as does the loan to value of the home that he's purchasing and the deposit that he puts down. The more money that he puts down and the bank feels more comfortable with the loan, the better the rate would be. And last but not least is the debt to income ratio is also very important. What other debts does the borrower have in the way of a credit card debt, car payment debt, school loan debt? All of these figures figure into what the rate would be. Right now, I'm doing loans on a daily basis in the high twos. They're very good, strong loans with very strong borrowers, but it can adjust upwards depending upon the borrower's personal criteria. Rates move up and down on a daily basis, but it all depends on the borrower that you have. The stronger he is, the better the rate. Obviously, like anything else that you purchase, cars, boats, what have you. The stronger you are, the stronger the bank will back you up with a better rate. That's
right.
Basically it.
Very good, very good. Thanks, Dave.
Mm-hmm.
Doug, I have a question coming in for you. They say, Doug, you mentioned you can close in 3 weeks. Which programs was that again?
That program is primarily the ones that are my portfolio programs. They are the ones that are bank fallout. It's not SBA. They're conventional programs that have up to 30-year fixed components to them. But it's basically those types of programs.
Very good. Thanks, Doug. Thank you. Oh, what docs are needed for church refinance, Doug?
Well, a church in the best of times is not usually the type of a loan that a lot of lenders like to lend to. And
Right.
that's because nobody wants to foreclose on a church.
Right.
Having said that, we have financed a number of churches. The issue has to be that it needs to be a very low LTV to do it, especially now during COVID. And now, what was the question though, as far as what was needed?
Well, they're just, yeah, what documents are needed for church? So I guess they're just,
Okay.
you know what I mean? So we know it's different than residential. So what documents would you need to even try to entertain something like that?
Right. Okay. For a church, we would need to, I have a specific church application that asks for about the membership, the number of members, and some basics about the church. But beyond that, we need financials, just like a business, 3 years financials and year-to-date financials. We need to, if it's a purchase, we need to know what the how much cash they have to put down. Now, typically, especially in this environment, we also look for a couple of individuals to guarantee the loan. So, unless it's a very strong, well-established church that's been around for a long time and has great financials and the loan to value is very low, we're going to be looking for some personal guarantees as well.
All right, Doug, thank you. Thank you. Dave, another question for you, Dave.
Sure.
It says, David, I'm looking to finance my home. I owe $300,000 to $315,000. The house is valued at $800,000. How can I reach you?
How can you reach me?
How can you?
Well, certainly, you can call me, or certainly, Nate, you could provide them with my email address. That's a no-brainer. That's very easy to do. Providing everything's in play. Wow, loan to value is fantastic. You'd probably get a tremendous rate. Love to speak with you. Reach out to me, either email me or give me a call, and we'll go over what we can do for you. Certainly, I have a website which has the applications already built into it. I could forward you that. It's a world of information that you could look at with resource centers and so forth. But love to talk with you and help you make that happen.
Okay.
Absolutely. Very simple to do.
All right, very good. Very good, Dave. They have another person has another question. How long does it take for closing from the time of taking the application?
Well, there's many different programs available. The company that I work for has some KICKSTART programs where you have a borrower who can basically put all his information together ahead of time while he's looking to purchase a home, and therefore have it all in place. So when he finds one, you can close in as little as a week. I know it sounds crazy, but it can be done. In most cases, it's all about the borrower. One thing I will say is that borrowers drag their feet usually, and you really have to be very persistent to get the documentation that's necessary to facilitate the loan. And it's funny, the whole time you're trying to do that, they're asking you, when am I going to close? When am I going to close? But you're still waiting for information from them. So it's all about how quickly the borrowers can get you what you need in documentation after they fill out that 1003. And if that's brought through very quickly, you can close in 30 days, 45 at the outside without question. So it can be a very quick process. It's really up to the borrowers how fast they give you what you're looking for to get it done.
All right, fantastic. Thank you, Dave. Thank you. All right, so I have a question for me. What's the different packages for the program? So we have 4 different packages, actually. The one package we have is our Quick Start package. That program's set for one individual to go through the training and get licensed. And that's the Quick Start. The second package we have is called the Emerald package. It's our most popular one. And that package is for 2 individuals to go through the training. And with this package, you get the digital marketing that's a part of that program as well. And again, like I said, both of you, the individuals get licensed and they get sponsored as well. The third program that we offer is the Ultimate package, and that one's for 3 individuals to be licensed and also go through the training. And the fourth package we offer is called the Prestige, and that package is for 4 individuals to be licensed, trained, and things of that nature. I highly recommend you go to our website, take a look at each and every one of the packages to see which one's a better fit for yourself. What he said, Nathaniel, we spoke a week ago and you mentioned you have financing for the program now. What does that application look like? Oh, great question. Yes, we do have financing available for anyone that's looking to get financed with our program. It's a simple 1-page application. It's just a matter of you having a credit score of 620 or better and actually being able to verify your income. And like I said, it's a 1, 2, 3 step process, and it's a rather quick process. So we normally can put the application through one day, and the next day the application is actually funded, or the loan is actually funded. This is for Sagar. It says, what social media channels are most popular to use for the Emerald partnership?
Great question. So, for the Emerald partnership, it's basically Facebook and LinkedIn are usually the ideal sources for social media. As I stated before, you can actually use a Facebook ads manager and really create a target audience within the campaign, and pretty much, narrow down to the individuals who are actually looking for either a residential mortgage, commercial loan, debt settlement, student loan refis, and things of that nature. So Facebook and LinkedIn are the ideal channels.
All right. Thanks, Sagar. All right. One other question. It says, can I close a loan with you guys first and then use that commission to pay for my program? The quick answer to that is no, really. But the advantage of actually being in our program is to have the ability to work with individuals that are in our partnership as far as lending is concerned. Like, that's how Doug and I have a relationship, and that's how we're able to get Dave sponsored by you being a part of our program. So you have to become a partner prior to receiving commission on your closed deals. So I hope that answers your question. Doug, that's for you. Do you require any reserves or minimum account balance?
Well,
So
that's a moving target.
right.
It depends on the program. It depends on a lot of other factors. There's always some reserves that are required. With an SBA, for example, even though you may only have to put down 10% for the loan, for the purchase, for the including closing costs, you're not going to be able to just show that 10%. You're going to have to show something above that. What that amount is, again, it's not a fixed amount like in residential, where they might be looking for a certain number of months of reserves. It's going to depend on a lot of factors. On the conventional side, because we're doing bank fallout on the conventional side for the most part, the reserves are going to be are minimal. Now, having said that, I did not speak about certain programs like for large multifamily, and I'm talking about minimum loan amounts of $1 million. For those types of programs, the rates are for 30 years, for 30-year amortization, are down in the 3s and 4s. But those are through Fannie Mae, Freddie Mac type programs, which do require significant reserves. But for the SBA and the conventional that I mentioned before, the requirement is not as precise.
Okay. And another question came up for you, Doug, too. Doug, in the commercial side, which programs do you think is booming right now?
What programs or what?
Yeah, that's what they asked. What programs do you think are booming right now?
Well, first of all, SBA is booming for owner-occupied properties for obvious reasons because of the very high LTV. As long as it's an industry that is not in a shutdown, and where they're able to show maintaining income. Now, other than that, my bank fallout programs are doing extremely well for property types like mixed use, small multifamilies, some owner occupied. In other words, investment type properties. They're doing very well. And because of the fast turnaround, the minimal amount of documents that are required. As a matter of fact, for a lot of the programs, tax returns are not required for the bank fallout programs, and simply just P&L statements that the borrower can put together.
Okay, very good. Thanks, Doug. Thank you for that. Now, this says, for Dave or Doug, what is the estimated commission amount for a loan deal in the range of $250,000? I don't know if either one of you can probably answer that.
That depends. I can answer what I know. It depends on the lender that you are involved with. It can vary from...
And the rate and things of that nature too, right, Dave?
Yeah, exactly. It can go from half a point, basis point, up to 2 basis points.
I can add somewhat to that. In my area, it depends on the program drastically with the program. SBA programs, for example, restrict the amount that you can charge on the, as far as on the front end, if I'm getting fees on the back end, if we're getting fees on the back. It's
okay.
Similar to the residential, the residential restrictions. But having said that, SBA programs are generally much larger. I'm doing $2-3 million loans.
Right.
Also on the bank fallout programs, they pay. I can give you programs that where the fees are much higher. And with the commercial, unlike the residential, I'm working all I'm actually working through Nate and his organization. So I will be paying Nate the referral fee, and then he would in turn then pay you guys.
Thank you, Doug. Thank you. Another question for you, Doug. It says, what are the prepayment penalties if you decide to refinance or sell before the term of the loan? And they say, greetings from California.
Okay. Well, there are many different types of prepayment penalties depending on programs, but I'll give you some examples. With SBA, it's generally a 5-3-1, 5% first year, 3% and 1.
Right.
With conventional loans, it can be a flat 3, 4, 5 years. In one case recently, I increased the prepayment penalty out to 7 years to lower the rate. But the last 3 years came down to 1%. When you're dealing with large Fannie Mae, Freddie Mac type multifamily, generally there's prepayment penalties that go out to the term of the loan, like for example, for 10 years. So there are so many different programs in commercial that there isn't one fixed answer for that.
Right, right. And they threw another question at you, Doug. Are jumbo loans still available now? And I guess that's based on what's going on right now.
Jumbo in commercial, you mean?
Yeah, but for both. Dave, you Doug, you can take it from there, and then Dave can jump in.
Okay, the commercial, there is they don't distinguish between regular size loans and jumbos.
Right.
There is not a certain amount. Ironically, with the commercial loans, larger loans are better than smaller loans.
Right.
So in multifamily, for example, if it's less than $1 million loan amount, I cannot do. The rate is not as good as if it's over $1 million.
Right, right.
So,
okay. And Dave, thanks.
Yes. Jumbo loans are certainly available without question. A lot of times they fall into the non-QM category. They're not a qualifying loan. They are available, and they usually will entail a slightly higher interest rate because there's more risk involved with jumbo loans. But again, it all depends on the borrower and the strength of his, financial statements and FICO scores. But yes, they are certainly available, done every day.
All
Absolutely.
right. Beautiful, beautiful. All right. Thank you, guys. Thank you, Doug. Thank you, Dave. One question.
thank you.
All right, Dave, I'm sorry. It says, Dave, what states do you think would be difficult to get a loan closed in?
I don't think any state would be difficult.
All right. Thank you, Dave. Thank you. Great answer. What is the process for getting starting the partnership with SMG Financial? And this is addressed to me. Well, it's a simple process, actually. It's just a matter of the individual hearing the information, understanding what the program is, and knowing it's not a get-rich overnight type of industry. It's really wealth over time. And it's a matter of them signing the contract and initiating the payment. And they get started that same week based on the information coming back to us. So that's all I have to say on that. Any other questions before we wrap it up? I know we kind of went over the time frame, but there was a lot of people in this chat, this webinar, so I wanted to make sure that a lot of people got their questions answered. But this information will be recorded and it will be placed on our website. If you came through the webinar later on while we were going through the process, feel free to take a look at that and reach out to anyone on the team here. They can give you any additional information. And keep in mind, we're going to be having additional webinars bi-weekly. There's actually a schedule on our website to give you the specific dates and time if you want to attend another webinar. So if there are no other questions, I want to thank all of our panels today, Dave, Doug, and Sagar. I want to thank you guys. I also want to thank our graphic designer, Brian, who put this presentation all together. Did a great job, so I appreciate that. Yeah, and I just want to again say thank you guys, and and look for more information about SMG Financial and see how you could be a part of our partnership. We love to have you. This is a recession-proof type of industry, and people are always needing money, as you hear Dave and hear Doug go through their presentation. All right, so again, that's all I have, and I want to thank you all. Have a great day, and everyone enjoy your upcoming holiday. Thank you very much for attending.